Hey, what's going on, everybody? Welcome back to this is your financial advice. My name is Jay Chains, and I'm hanging out as always with my homeboy Matthew. Matthew and I have started this series a couple weeks ago. Super excited to bring it to everybody. And you know, it is what the title is. This is financial advice. We've had a couple fun weeks of getting through some things. We've seen Matt's set grow. That's probably I'm really excited about that, Matt. I know that he is logging into Twitter right now so that we can do this Twitter space at the same time. Hey, Matt, can you hear me?
Can you hear me?
Yes, I can hear you.
The space says unavailable.
Really?
Yes.
That's interesting. You gotta love that. Let me see here. Copy the link. Invite via DM. Let me send it to you again. Try another copy of it. See
like people were noticing this. Like
that's crazy.
Spaces have just been like gone.
So that's maybe what we're experiencing, because it shows me in it. It says that the space has started, and it is going according to Twitter. Let me check my computer here. Man, you know, you just said it a second ago. Like, this has been a train wreck. Yeah, so it shows that I'm in there.
So whenever I try to like get it, it says start listening, and then it says the space is not available. But like this happened like the last 2-3 hours. Like nobody's been able. Like I've seen lots of these Twitter spaces. It's kind of like die out.
Ooh, that's no good. Well, that's interesting. I see we do have a couple people that are tuning in there on the YouTubes. Hey there, folks. We got Corey and Ninja Glock popping in on YouTube. Yeah, it looks like Twitter space. I'm in there by myself. I'm the only one that's allowed to be in that space for some reason. Even Matt is showing that he can't get in. That's crazy.
Do you have the YouTube link?
Yes, I do.
I can tweet that out. We'll make our own Twitter space.
There you go. All right, I'm going to pop that into the private chat here. Or here, I guess they're on YouTube if they're watching it, so that you got it and you can use it. I will also tweet that out. Man, that's crazy. Twitter is just trying to hold us down.
Musk, get it together, man.
All right, bear with us, guys, while we just put the memo out that we are just live in this thing on YouTube. All right, Twitter is ruggish.
Can you hear a vacuum in the background?
Very lightly.
Okay. Give me 1 sec.
But that's only once your audio switched. When you were on your other audio, I could not hear it.
Okay, hang on 1 sec.
All right. Hey, everybody. See, the group is starting to assemble here over on YouTube. Thank you guys for joining us over here. Holy smokes. I'll tell you what, I am not sure what is going on with Twitter, but the space is rugging. Even Matt couldn't get in and said that it was unavailable, showing me I'm running a solo space right now. I'm the only one allowed to be in it for whatever reason. But come on, Uncle Musk, Uncle Elon, get that thing fixed. But Matt will be right back. I know we're going to try to send the message out. I just tweeted out. So if you guys are on Twitter, make sure that you send that out to your community. Let them know, hey, we're not on Spaces today. We are on YouTube. You know what's funny though, Matt, is that we are live on Twitter. We are live streaming on Twitter, but we can't be on Space.
Okay. It's like just as good, but almost.
Almost. So when you were trying to get into the space, I don't think that you could hear me. I was saying one of the things, I got this nice little hair thing popping out here. One of the things that I'm most excited to catch up with you about this week is the addition to your set. Your scene is growing. We got the
That's
plug,
right.
we got the mutant hat. Love it.
That's right. Yeah, and pretty soon I'll maybe have some pictures up pretty soon. Maybe get the canvas pictures of the mutants up. I got one of my Oni force as well, which been crazy making a comeback. We've seen a lot of the NFTs coming back, liquidities in there, and I'm glad I was able to hold on to that one for a while. But kind of crazy to see things that were $400 or $500 and they're back to 1.5 ETH, almost 2 ETH now. A lot of good NFT projects coming back, making an interesting charge after that Blur drop, I guess, yesterday.
Yeah. I mean, that to me was, I wish that I felt a little more confident. I didn't get any. I didn't really feel when I logged in, to be perfectly honest with you, and it may be a great platform. Just on the aesthetics alone, I was like, I'm not hooking my I'm not hooking my mutant wallet up to this. I'm just not.
Yeah, it's a little bit of a challenge, and I think too for small airdrops. Like I'm not a trader. Like I know that I was listening to a lot of the spaces today and yesterday, and people were getting massive amounts of capital, but it was because they're trading hundreds of thousands of dollars or tens of thousands of dollars in NFTs, all that kind of stuff. So that was never one that made a lot of sense for me. And not that I love OpenSea, but it's kind of the platform I'm comfortable with and that I come back to often. So maybe one day they'll do their own drop, but I'm just holding my fingers for that MetaMask one. It's got to come soon. That one's going to be, maybe we get a condo or a beach house or something.
Something, right?
Yeah.
You just never know. OpenSea, I love that whole thing because yes, there are other options, but they're just not the same. Like for me, like I like LooksRare, but what I don't like is that you could buy something that, and maybe it's been a while. It's just been a while, so I looked at the platform that you could buy. It's like say there was something on OpenSea that was from a compromised wallet. Like you could still buy it on LooksRare very easily, whereas it's not even available on OpenSea. And I think that's probably a good security method. But even though that's flawed all unto itself, as we've seen in the news lately with. I know there's one guy on Twitter. He tweets out to him every single day saying, we've met all these requirements. Like, take this off, please.
Yeah, and I think it's just going to take some time for everybody to catch up, or some of these platforms to catch up. And they're trying so many new things and new functionality and new royalty systems and fee systems and all that kind of stuff. And it's interesting and great to see because you're seeing folks like iterate on different things that have gone well and things that haven't gone well. And you're not going to have one player stay the king forever. It's not just going to be OpenSea. So it's nice to see, especially other platforms and using other blockchains as well. But I do find it really interesting. Like if you look at some of the Solana and Cardano NFT marketplaces, OpenSea's definitely set the precedent for the user interface. They were able to say like, this is what people are comfortable with. And like, let's not screw that up. Let's do the same exact thing, which is totally fine. What do they say? Impersonation or copying is the sincerest form of flattery. So I guess they did it right. Why bother reinventing the wheel? And, it's cool to see that come to fruition. And you see a lot of what we're kind of coming to see as standardized ways that people are engaging with the content. Where from what I understand with Blur, it's very much more like technical analysis, much more of a trading environment that they set up, which is also really cool. And I kind of love the retro feel of it as well.
Yeah, and like you said, it is that retro feel. It is set up for traders. I am not an NFT flipper. I am, I would consider myself, if anything, like a crypto trader over a hodler. I am the opposite in the NFT game. I buy things that I enjoy and that I will enjoy for a very long time. I don't. There's really I don't get into the game to flip, and that's just that's just my personal style. That's how I like to invest, which I think kind of goes along with what we're going to talk about today, right?
Yeah, absolutely. And I think too that those, I think you mentioned this earlier today, but NFTs are so important from an art perspective as well. Like you have to really like the content and the project itself, regardless of whether or not you think the token's going to go up. That's one of the reasons I stayed in like Oni Forest, is because it's just one of those pieces of art that you just really it resonates with me personally, and doesn't matter goes up or down, left or right. It's gonna stay in the wallet no matter what.
Yep, absolutely. All right, so that was the intro to the show today. Definitely time to get into our meat and the potatoes. So you are reading a new book, is that correct?
Yes, sir. How to Invest by David Rubenstein. It's fantastic. Don't get it wrong. It doesn't teach you anything about like actually investing, but what he does, and what I like so much about it, is you kind of get the compounded effect of him interviewing other really good people in the space. And so he talks about folks who are investing in regular equities, real estate, cryptocurrencies, alternative assets, and getting a sense from them of what their success has been like, where they've looked for opportunities, and how they look for deals, and all those kinds of things. So it's been really interesting to read, especially getting a bunch of perspectives from other people. And one of the things I wanted to just sort of chat through was kind of his takeaways for investors that I think we might hear often, but part of this is hearing it so many times that it becomes second nature and you don't really think about it. And so I wanted to share a couple of those with you today, just to kind of help us get set when we talk about responsible investing and ways to do this in a way that you're able to grow wealth sustainably and for the long term.
Awesome. By the way, I just got word from Corey, posted in the on the YouTube chat, that the space is working now.
Oh, fantastic.
So
should I head there, or should I just stay here?
If you let's just pause for a second, head on over there, because we can do the both thing, and then so yeah, if people want to head on, because we're just going to get started into the meat and the potatoes. So I think that's a great time for us to fire up that Twitter space.
Sure.
Hey, Corey, throw up a thumb in space if you can hear Matt talking as well.
Give me 1 second.
All right, cool. We got the thumb up, so our audio is good. Thank you for bearing with us here for just a second, folks. But GM to everybody. Now you can't hear Matt because he is going to be coming up to be a speaker here. So I've got him muted on the video. He will be up here on stage shortly as my co-host, and from there the audio will route to both. But GM everybody, thank you for being here. All right, there we go. I sent that to you, Matt. You got the co-host spot coming up. I see Turbo just popped in. What's up, Turbo? Lady Boss. We got Keep 4, Zach, Corey. Thank you all for hopping in here. And then we still have a couple folks over in YouTube land still as well. Now let's see. I see that he is still. Let me cancel the co-host. Let's see. We add as a speaker. We got to, sometimes we got to ease into this Twitter space thing. All right. Matt is now the speaker. All right, and I'm going to bring up Turbo to speak while we get all of these audio things. Turbo, I'm going to bring you up if you can. I know that you had a dentist appointment today, so I don't know, how well things are going for you at the moment. But while we figure out all this audio routing issue, now that Twitter Space is working, thankfully, now sort of, I guess, we'll figure this out shortly.
No, most definitely, man. I'm definitely a little sore. It was a very large tooth, but it's all good. So this is financial advice. Brush your teeth regularly and make sure you go to good dentist.
It's all about having a good dentist.
Can you hear me?
Yes, I can.
Fantastic.
All right.
On the subject of dentists, very quickly, J Chains.
Mm-hmm.
Have you ever heard or seen the movie Little Shop of Horrors?
I've heard of it. Yes, I probably
Yeah,
have seen it many years ago.
I played Steve Martin's character, the dentist, as like a 13-year-old in my high school play, and it was fantastic because you got to pretend like you were huffing nitrous oxide for pretty much the entire play, and that was pretty fantastic when you're like 13 and you have no idea what that is.
That's pretty fun. I like that. I too, sir, played the role of a dentist one time. I played the role of a dentist in a Lifetime series called My Life is a Lifetime Movie, and I played the dentist. I played a dentist who would drug his patients, and this is obviously a true story because it's on Lifetime. Would drug his patients and then harvest their organs on the black market. Yeah, very interesting.
You know, we need to make some organ NFTs. That would be pretty amazing. Put your organ on the blockchain.
I think the community would love that. All right. So we got the YouTube working, we got the space working. I'm really excited about that. Thank you all for bearing with us while we got through some of these challenges that Twitter has been throwing at us nonstop for the last several weeks. I tell you what.
Yes, and yeah.
But anyway, all right.
Thank you for everybody's patience. You know, and just to kind of circle back, this is the book I'm reading. It's called How to Invest by David Rubenstein. Fantastic. He goes in and talks to a number of other very successful investors and gets a lot of good information from them. And what I thought I would want to do, one of my favorite things is saying, like, let me go read something so you don't have to. Because we all have a bunch of busy lives and reading takes a lot of time. So if you don't have to do it, let me help in some respect. So I wanted to kind of share a few different takeaways from him and some of the things that he learned. And while they are probably very obvious in many respects, hearing them over and over and over again is really important so that we internalize them in our own investing mantras and are able to benefit from them as well. So, you know, the first one that he brings to the table is don't risk more than you can truly afford to lose. And what's really important here to remember is that anytime you do that, you're going to feel those emotional pieces that kind of come with investing that make or break a lot of portfolios, right? If you're investing on emotion and the highs and the lows of how things go, instead of really not worrying about the money that you're putting there, you're going to make short-term decisions, probably not the best decisions, and it's going to probably not go as well as you'd like. So that one's always one at the top of my mind. We hear that a lot, but it's important to keep in mind. Diversification is also really important, but to a certain extent. In my experience, there's diminishing returns if you are looking to diversify past maybe 8 or 10 different options. You want to be able to pick a small batch of things and then keep adding to those over time. And those are the ones that you're never really going to let go of, like Bitcoin, for example. For me, it's like something I just keep adding to the stack over and over and over. In our current portfolio right now, we have probably 6 or 7 tokens. And that's probably not going to grow too much wider. Even though there's over 20,000 cryptocurrencies that you can invest in the space, it's not really something that I think, you know, having 100 different choices is just not going to get you in the spaces that you want to go. If you want to take small allocations of a sort of high risk opportunity part of your portfolio and kind of put those into some sort of, you know, some of the higher risk tokens, that's definitely some way to add a little bit of, you know, upside to what you're doing. But on the whole, focus on just, you know, probably 7 to 10 cryptos that really resonate with you and you think are going to have a lot of staying power. I think one other one that I really, really liked was having realistic return expectations. This space has given people like a very sort of crazy sense of what returns should look like for the normal investor. And that's something that I want to help us bring ourselves back down to earth. Quite literally, like when Moon is a very is a way that we kind of look at the market and different crypto opportunities, and we think to ourselves, oh man, this is going to 100x, this is going to 10x. There's a reason that they give you 3% in like a treasury rate or 2% in your savings account. Those returns are very, very difficult to come by. Single digit returns consistently over years is very, very difficult to come by. Compounded annually over 60 years, Warren Buffett was able to get 20%, which is pretty insane given his track record. So when we think of looking at opportunities in the crypto space where we're, you know, here's a 10% return, here's a 20% return, all day, those are going to make you successful over the long term. And if you're waiting to hold out on 100, 100x, 200x, you may hit it, but over the long run, you're probably going to be hitting a lot of strikeouts. And then the last one that I'll point out, just to kind of give us some things to discuss, is doing your own research and paying attention to the reciprocation of the team, right? If there's information out there that's continuing to come out there and you can pay attention to what the team is going to be doing, those are all really good signs. But if you see things where, they're missing deadlines or they're not being responsive and those kinds of things, if you can't explain this project to somebody, or if you have a hard time understanding it yourself, that's kind of a red flag. And there's a whole bunch of opportunities out there. So we don't want to get stuck thinking like this has to be the one. Let's focus on the things that we can understand, that there's a lot of information about, and then, of course, do your own research in that respect.
Yeah, absolutely. And one of the most important things I think about, the last point that you made there, and obviously there's a bunch of things we can talk about in that, doing your own research and looking at the teams, and you start to see like missed deadlines, all that kind of stuff. If they're being transparent, that's okay. But like you said, if they're not communicating, the roadmap's not getting hit, those should be absolute red flags to you. Especially right now when we know, like, historically trust is low. Projects and founders need to be in front of absolutely everything. You just need to communicate. It doesn't matter if you don't have money. It doesn't matter if you're not meeting, the roadmap. As long as you say, hey guys, we've hit a couple hiccups, things are slow. People understand. Like people will get that. We're all humans. But just that's the most important thing, is like, you look at the people that if you're spending money, if you're investing your money into something, you do want to know who you're getting. Not really in bed with, but in bed with, because that's your money.
Yeah, absolutely. And that kind of brings us to one of the next things I want to talk about, which is a focus of a blog I wrote recently regarding kind of what they call headwinds and tailwinds with respect to investment. And if you've ever been in a plane and you've gone cross country, it's always really nice if you're going from New York to if you're going like from San Francisco to New York, because you have the wind kind of pushing you faster, so you get there 5 hours. Whereas if you're going from New York to San Francisco, you get there maybe 6.5 hours. And investing is exactly the same kind of thing, where there are businesses that operate and there's a bunch of headwinds, and there's businesses that operate and there's a bunch of tailwinds. And we always want to be looking at opportunities where these tailwinds are prevailing over the long term. And I kind of wanted to share two different options of like what I think are examples of what these are. Because they're very prevalent today. So one example that we're going to find is from a headwind perspective is in exchanges. You've got like Binance, you've got Coinbase, you've got Kraken, you've got all these exchanges. KuCoin, probably 4, 5, 6 years ago may have been a really good time for them, because there weren't that many places to go get coins and different options for you. But now there's a whole bunch of regulatory scrutiny. There's a whole bunch of now big criticisms over these different platforms and an increased competition. So they become a commoditized service in a sense, that they're just, they're kind of racing to the bottom in terms of what their fee structure looks like, or what they have to give out for free for folks. And in some cases, they're able to pad those fees with issuing their own coin, like Binance does. And they do earn revenues, which is really good. So most projects don't really earn revenues. Right. These projects certainly do, which is great over the long term, but it's really, really tough in this environment right now to be looking at exchanges as a place where I want to go put my money. Now, if you look at the tailwinds as an opportunity, I think the big one, and a lot of people would probably agree with me here, is going to be in the gaming sector. The stat that I found was that over $60 billion was spent on in-game assets in 2021 for assets these people didn't even own, right? This is Activision Blizzard, this is EA Games. These are all the organizations that come in here and you pay them money for assets that you don't own. Fortnite, all of these. And so that's a huge opportunity, because now you've got ways that these gaming businesses in Web3 with NFTs and decentralization are able to provide both developers and gamers new streams of revenue and new monetization channels for them to actually own assets, trade assets, and build a new ecosystem. And these games are going to be everywhere. They're totally going to supplant all the Web 2 ways that we engage in video games. And they're only going to get better, and they're only going to get more immersive. And things like wearables, or even being able to delegate your NFTs, are going to be really important moving forward. So those are just two really interesting aspects that I like to think of when we kind of look at ways that businesses are in a really good position or in really bad position. And if you find the projects that are kind of rolling downhill, they're not fighting a bunch of regulators and all that stuff, you're going to be in a really good position.
I like that. I like using those examples that you've got there too. And like, and with the gaming, I think that you could would you even consider like metaverse stuff into there too? Because it's so untapped and really undiscovered that really anything that you, as long as it's got any kind of staying power, like you're gonna do all right, because it's just peanuts. Like there was, man, this was last year even, when it's been a while since I've done this, so I probably should check it out again to see what it's like. But like one night I couldn't sleep, and so I just Googled trend search metaverse, NFTs, Bitcoin, crypto, all these things together, just to see how do they stack up, all related to each other. And the metaverse barely even was not even on the radar of any of them. It's like, well, that's probably a really good place to get in as an investor, because a lot of your opportunities, we've said this before, if you're trying to make generational wealth, it's not going to happen with Bitcoin. Unless you're already wealthy, it's not going to happen. You're not going to see that 1000x with Bitcoin. It's just not going to do that ever again. But if you get into some of these more speculative metaverse plays that literally have no attention, no market caps, no nothing, if they turn into anything, and you see that market cap go from $20,000 up to $100 million, you did all right for yourself.
Yeah, exactly. And there's a ton of them that are going to be open for investment. VCs are going to be pouring money back in, kind of like they did in 2020 and 2021. The other interesting aspect of this is that you don't even necessarily have to go down the metaverse path. I still think there's a lot of time that's going to be needed for those roadmaps to really come to fruition before we really get a sense of what people are flocking to. Right now, they're kind of like, I just want to do the thing, and I'll have the wearable and it'll be great. But in a lot of cases, we don't know if those games are going to pan out. So it might be really tough for me to say, I want to go invest in Big Time, or I want to go invest in Illuvium or Yuga, right? Or the other side. These are projects just like any other NFT project. But investors can also take a look from a Web2 perspective at stock organizations or companies that issue stock that do the same thing, like Take-Two Interactive or Activision Blizzard, if Microsoft buys them, for example. So there's plenty of opportunities in the actual stock market. So you can put them in your 401k, you can do covered calls on them, you can take options if you want. That allows people in the traditional web sense to also get exposure to gaming, which again, I think is just going to be it's just kind of a no-brainer from a tailwind perspective. People aren't going to stop playing. We've already kind of got their virtual stuff already together. And I think don't fade the AR VR part too. There's going to be this kind of bridge between them where we have more immersive experiences. And as we bring people into the ecosystem, they're going to get more used to those things. And I think that that's just a great opportunity.
Wow. Yeah, I think that's, listen, it's endless. It's endless opportunities for, those ecosystems, this ecosystem that we're in. And I like what you're saying, with all of this and the concepts of the headwinds and tailwinds. This is this is like the Buffett lesson of the day, right?
Yeah. Yeah. So, and just on that note, what we've done is, so as part of the book that we wrote, I wanted to be able to provide that information to people in bite-sized ways. And so every week on a Wednesday, we're going to release the next sort of chapter of the analysis that we do in that book to kind of expand a little bit on it, have a little bit more of a point of view, and use a little bit more real estate from a blog perspective to kind of opine on some of the opportunities there. And so today's Buffett lesson was sort of the headwinds and tailwinds opportunity, which I thought was nice and apt for our discussion.
I agree with you, man. And I love how, and this is, when we first brought up the idea of what we're going to do with the show, and you talked about the book and applying, the book that you wrote. Right. I keep it right here on my desk. One of these days I'm going to start reading it, but it's Warren Buffett in a Web3 world. And what's really cool about it is how you set it up, where you've taken, something from some shareholder note throughout his investing career. And now we apply into another thought process and strategy, because he obviously doesn't like crypto, but being that, in investment, there are applicable strategies that you can, bring over to this Web3 world. So the fact that you did that, I love it. And that just, I think that brings us to our next segment that we're going to talk about, because we're about halfway through, and I do want to like bring some people up from the community to ask some questions. Because I think that's important to engage in some community activity.
Yeah.
I've got a hard out at 4 on my time, so we got another half an hour. But I do want to get through. We've got a list of the top myths when it comes to investing. Now, this goes not only for crypto; it's just, I think, investing in general. So I do want to get through that, and then have everybody that wants to participate in a community discussion do that. So if that works, we can get through those top myths, and then bring some community folks up and have a nice conversation.
Yeah, that sounds great. And again, so we want to talk about some of these myths. So we're just saying, like, let's help demystify or help correct people's perceptions of how investing works, or what they might want to do. And I think going through a set of what mistakes people have made in the past, I'm always a fan of standing on the shoulders of giants, and like, just because other people make mistakes, that's only a benefit for me. Like, I'm going to be able to take the lessons learned from there, and be able to work through that. So the first one that comes to my mind from a myth perspective is that you need to pay off all your debt before you can invest. Some people think that they have to be at a completely zero debt ratio in order to say, here's some spare capital to go out and go invest. And I am actually a perfect example of why that is not the case. I right now have a very, very small amount of student loans that I keep on my books. I could pay them off, but I actually keep them on my books because, one, the longer that you have that track record for paying off a debt, the better your credit score is overall. So making those consistent payments is actually just really good for your credit. And if I'm say my rate is 3%, but I can go invest in Bitcoin and I get 10% return, my net return is now 7% over the 3% that I'd be paying on my interest. So one thing to just kind of keep in mind is that you don't have to make sure all your debts are certainly in a manageable spot. And if you have any outstanding debts where they're all kind of over the place, I would definitely look into refinancing or bringing those loans all into one consolidated loan so that you can just make it easier and simpler on yourself. You definitely don't have to pay off all your debt in order to invest. So that's number one on my list. You hear a lot of people talk about needing to be rich to invest, and that's absolutely not the case, right? $10, $50, $25, whatever it is, paycheck to paycheck, that you can dollar cost average into your favorite token or your favorite project is going to be a totally perfect and fine way for you to get your feet wet and just start. And I think that's one of the things that people have a hard time with, is like, how do I get started? And like, I don't have enough, so it's not going to matter. And that's just not the case.
Like, I know that, like with the Cash App, I think it's $5 increments. You can do that. You can buy $5 worth of Bitcoin at a time. So you can and you can set that stuff up on auto things, like you're saying. So it's every week, every other week, whatever it is, whatever you can afford to put in, because I think that's the most important thing, is that don't take rent money, don't take grocery money, take a couple extra bucks that you have, throw that in there, and that will add up over time, and that will turn into hopefully some kind of a compounding, once we see the markets come back too.
Yeah, absolutely. And it's just the way like your 401k works, like they take it out of your paycheck, you never look at it, you can't touch it for 40 years. And then by the time you're 60, or depending on however old you are, you got a nice little nest egg in there, then you never really had to look at it. And that brings us to another one too, which is you have to be monitoring this stuff all the time. And that's also not the case. Like, it's easy to do in the crypto space because it never closes. So that can make it really difficult for people to, I guess, it makes it very visible, right? It's like, you can't take the time off. I'm always monitoring it. I'm always looking at it. I heard hearing people talk today about the Blur token, like, oh, I sold some of it, and then I woke up this morning and didn't really care what the price was because I knew that I had taken a step in my system to sell some of my profits, and it doesn't really matter what the token price is. So just because it's active 24 hours a day doesn't mean that you have to be looking at it 24 hours a day. And using a system like that to take a little bit out of your paycheck or whatever it is to add to your stack in an automated way is just going to make that a lot easier for you.
Yeah, my personal anecdote there is, don't try to go to sleep with a leverage trade in, because that will keep you up, and then it will become a 24-hour thing.
Yeah, and one of the lessons I've learned too is that if and you have to be honest with yourself. I think that's a really hard thing for a lot of people to do, is, am I really concerned when I go to sleep about what China's going to do, or what the futures are going to look like in the morning, or what the Fed's going to say? And if you're really concerned about those things, there you need to take a kind of hard look and say, like, maybe I am a little overextended, and that's okay. You can take some cash off the table, you can unwind some positions, but definitely to your point, James, about the levered position, that's always going to give me a little bit of a heartburn, and I won't be able to sleep super well.
The
So
leverage sweats.
thank you for bringing that up.
That's what I would call them,
Yeah.
the leverage sweats. Yeah.
A lot of times you might have people ask you or say to you, like, oh, the stock market, especially in the crypto space, is just gambling. And I think that brings us to the notion of the difference between a speculator and an investor. And what we see a lot of in the crypto space is folks who are speculators, and they're betting on whether or not a particular project's going to go up or down. And that is gambling. That is a sort of betting that something's going to happen, right? Investors, in a sense, analyze a project, they put money toward a project or a business, and in many, many cases, they don't touch it ever again, or they have price targets that they're very, very hard and fast on to make sure that they hit their goals in a specific kind of way. And having those systems in place is going to make it a lot easier for you to explain to people how this isn't so much gambling, but I've actually built a system. I've actually got some guide rails in place to make sure that I'm not overextended, et cetera. So I think that's a pretty important one as well. One that we hear all the time, and that I love this mantra, is that, oh, you can time the market. If you find me anybody that can time the market, I've got a crystal ball that I can sell you that is full of Digidaidaku eggs, probably. What did he say this morning? Digidog doo-doo or what?
Digidog doo-doo. I like it. That to me, it
so
works
good.
better.
Yeah, so you absolutely can't time the market. Anybody telling you they can is totally blowing smoke. And it's more important that you think of it as time in the market is going to beat timing the market, right? So having your plays set and being able to establish those positions and understanding that they're good for the long haul is going to keep you in a much better position, and you're not really worried about how things are going to move. So I think that's an important one as well.
Do you think just another way to say that maybe resonates with other people is the when in doubt, zoom out? Like,
look, I like that.
Look at that bigger picture. I mean, look at because you might be looking at like a 1 hour time frame, but if you zoom this out on a yearly, you're like, oh, I see where this is going. I see where it's going.
It's also, thank you for bringing that up, because it's also, and I'm sure we've all felt this, the minute you take a position, you look for a long time about whether you're in the green or you're in the black or you're in the red. Like, and maybe this is a week, maybe it's a month or whatever it is, but within those first like 24 hours, you're really concerned you've made a really terrible move. And you have no idea what's going to happen, and you've decided to allocate this capital, and maybe the market tanks 5%. You're like, what have I done? And then you're there for 3 months, and you do the zoom out, and you're like, oh, okay, now I've seen this trend go in a positive direction. It's a little bit of bumpy here and there, no problem. There's going to be volatility. There's going to be some stuff that's moving around, but you kind of have to be willing to just take that risk. And of course, they should be very managed risks. We talked about like the more stocks you own, the better your return. I don't think that's personally the case from a diversification perspective. You can be over diversified. There is such a thing. Try to stick between 8 and 10 different positions, and you'll be in good shape, and keep adding to those positions over time. And when you unwind one, bring another one back in there. That's totally fine as well. And I think one that comes like, people kind of think about this in a way that is, I personally do as well. Like in the crypto space, you only, and in venture capital and in business, you really only have to be right once. And that can make all the difference with respect to your financial position, generational wealth, how everything's get moved, right? Like, you've got people who bought 100 Bored Apes just because they had a hunch or they liked the art or whatever, way back before they knew anything that was going to come out of this ecosystem. They only had to be right once, right? It doesn't matter whatever they pick for pretty much the rest of time. It's not the case that you only have to get like one shot, and that's the one that's going to make the difference, right? Like, this is a marathon, not a sprint. We need to be in positions of being able to like iterate and pivot and make different moves. And so those are really important. You don't have to be right once, and you don't have to make it back the same way that you lost it. So if a lot of people will chase like, oh, I'm going to be on the Solana train here for a moment. I'm sure there was a lot of people like, it's at this price point. I bought it down here, it kept going, but they were so convinced it was going to do XYZ. So they keep buying back into it, not really thinking that there's 20 other thousand cryptocurrencies out there where they could be allocating this capital that might have a better chance of going up in value.
Yeah.
So don't think that you've got to make it back the exact same way that you lost it. And that might be kind of a hard one to wrap our head around. But I'll kind of pause there, see if there's anything that sticks out or if there's folks that want to chat too. But those are just some myths I think that we should dispel and have conversations about, what people's experiences have been, if they felt the same thing. Because I know it's probably, we're probably not the only ones feeling that as well.
Absolutely. Yeah. So anybody you want to come up, ask a question, you got a story that's, related to all of this, please feel free to request to come on up and be a speaker. You are more than welcome. This is the time to do so. But to kind of go with, one of the things you're talking about while we're waiting for anybody to do that, Matt, was, in the 7 to 10, ish portfolio allocation thing that you're talking about, say, you've got your goals like, okay, I want 5 Ethereum, 1 Bitcoin, 1,000 Cardano, 1,000 XRP. Like, this is when I set my strategy out. That's what I want. Now I've had a couple windfalls. I've got my 1 Bitcoin. Do I stop there or do I keep stacking on top of that? Like, I've hit my goal there. Now I could go on and start stacking another coin, or do I stack onto that one and just stick with my strategy?
That's a great question. I think, when you initially set out that strategy, you had a certain set of capital in mind that you're willing to invest. Now you have this other pot that may come in. Now you want to look at that strategy and reevaluate what your goals are, what your opportunities are, where you might want to hold some cash, where you might want to pay off some debt. Those are all things that you might want to look at first. Then you come to the portfolio and you say like, okay, now my new goal is 2 Bitcoin, 10 Ethereum, and 2,000 XRP, 2,000 ADA, et cetera. And you can expand that. You can kind of open and close it, like go higher or lower, however you want. But that's definitely something that's important, is kind of reevaluating what those goals are in line with the capital that you're kind of allocating for these investments. So great question.
So Zach popped up. What's up, my man?
How's it going, guys? Can you hear me okay?
Yes, sir.
Yes, sir.
All right, I'm on my headphones and I'm sick, so it's a double whammy. But I just wanted to chime in. I really like what you guys are talking about. I mean, this is some really good stuff, and I've been following this show ever since you started because I love it. But there's a couple things I wanted to talk about because I really agree with a lot of things that you guys were saying. One thing that I really liked that Matthew said was you don't have to feel like you have to pay off all of your debt first before you can start investing. Because for a long time, that's what I was trying to do. I was trying to pay off all of my debt and put all my money into my emergency account and everything. And I just kept justifying emergencies. And so it felt like I would get a little bit of money saved up and then I would spend it on, something would happen. I say, oh, this is an emergency. And so I need to spend this money. And after 3 or 4 years, I got fed up because I had no investments. And all I kept doing was spending my savings. So finally one day, I decided that I was kind of going to discipline myself and start splitting up my money. And I started putting it into stocks instead of just saving it. And that happened to be in 2020, I think is when I started. And I started making quite a bit of money from those. And what was funny is I wasn't really paying attention to crypto at the time. And that's when I discovered Polygon. And after about 6 months, if I would have put all that money that I put in stocks in Polygon instead, I would have made probably 10, 15 times as much money as I had put in there. And with that money that I would have made, I could have sold that and paid down a huge portion of my debt. And so this is something that I've been trying to convince my brother-in-law right now, because he keeps hounding me, hey, you need to focus on more debt and less on your investments. And I was like, look, I tried that for a long time and it didn't work. But if I can outperform the amount of debt that I have in my investments, then I can pay off my debt way faster than if I was to focus just 100% on my investments. So that's something that I really like that you guys were talking about. I think what I've been doing is any extra money, any disposable income I have, I've been splitting it 3 ways. I've been putting some into savings, some into paying down debts, and then some into investments so that I'm growing my crypto investments. And I have very little stocks right now because I realized that the crypto is growing much faster. But later on, I plan to put more money back into stocks because they're stable and kind of diversify, like you guys are saying.
Mm-hmm.
But in 2021, I think I had $2,500 in stocks that I had split up over time, and I put $2,000 between Bitcoin and Ethereum. That $2,000 that I had in Bitcoin and Ethereum, I put it in mostly in July. In September, it had doubled. My stocks had made $1,500 in like a year. So I realized real fast that it depends on what you're trying to do. I mean, stocks have a lot of good things. You know, they're stable, they grow long over time. But crypto, since it's there's such a small market cap compared to stocks, and it's so new, there's so much opportunity, and that's why we're seeing these 10x gains. And I think that's a reasonable expectation, not crazy, but kind of pushing it is a 10x. I mean, I could see maybe not at the price that Bitcoin is at right now, but from the low of about 16,000, I could see Bitcoin maybe get up to 140,000 in the next peak. But Ethereum, I definitely could see a 10x from its bottom. I think that's a possibility. So I think that's something that you could kind of look for, but don't wait for it. I mean, if Ethereum reaches $8,000 and you've got 2 or 3 of them, don't wait for it to hit $9,000 before you start selling.
Right.
But I think that crypto is a really good way to kind of accelerate your wealth creation. Yeah, I've really enjoyed this show and the things that you guys are talking about. I just want to chime in.
Awesome, Zach. I appreciate it, man. Zach's awesome.
It means a lot.
Yeah, great contributor. He's on a lot of and he's out on the West Coast too, and he makes a lot on the morning show. So I appreciate you. I appreciate everybody that listens and contributes to what we do here. It's important. Let me ask you a question, Matt. So kind of in along with time and timing the market, I kind of feel like in crypto we have a little bit of advantage over to maybe some of the stock bros, right? Because we have this idea of a 4-year cycle, so we kind of can time a market based on that. Sort of. It's not a perfect science, but it's a gauge, right? Does that make any kind of sense, or is that like just the wrong way of looking at it?
Well, first, I just want to commend you, Zach, on again thanking you for listening and your contribution and doing the right splits between investing, the debt, and the savings. I think that's a fantastic way to go. And to your point, Jay Chains, I think it's interesting that we think of the 4-year cycle as kind of a biblical truism that because this happening or because these cycles are in place, they are going to repeat. Those rainbow charts, those log scales that they've shown that talk about like how this Bitcoin is going to grow over time or how Ethereum is going to grow over time, just astronomically important for us from like an investor perspective. But I would challenge it only because 4 times a year, companies in the stock market have to tell us how well they're doing, and people time earnings all the time.
Good point.
Right. So they're buying options on like whether they're going to hit or miss, whether they're going to have great guidance or poor guidance. And those positions are all based on whether the market's going to be timed in the right way, in line with other decisions that might be macroeconomic in nature as well. So there is kind of this notion that like, I forget that there's a 4-year cycle. It kind of just like, if you automate it, you're always going to be in the right position. One kind of caveat that I'll come back to, it's more of a Web 2 kind of strategy, but I think from when somebody like Zach kind of talks to me about a little bit here and a little bit there, when we go from a diversification perspective in regular stocks, one strategy that I have, Nike is a great example, right? It's about $127 a share. Every 2 weeks or every week, there's a couple $100 that comes in from my 401k, and I'll buy like 2 or 3 of those, just because my goal is to get to 100 shares. The reason I want to get to 100 shares is because when you get to 100 shares, you can start selling covered calls on a stock. And what that allows you to do is gain monthly or weekly passive income from holding that asset and selling out an option call. And that you can do without any leverage, and you can do it on stocks you own. And so when we look at adding a little bit to the treasury chest every time, my goals are, it doesn't really matter what the price is. I'm trying to get to a shared number so that I can then go do something that earns me additional passive income for holding those assets and do them with dividend paying stocks as well. So that's just something that, I would love to eventually do a workshop on showing people how to do that, because it's such an easy thing to do that people get kind of a little bit afraid of. And it is a bit technical, but it can earn you a ton of money if you do it right. And it's very, very low risk. It's nice passive income.
I think that that would also be kind of along the lines of what you just said there. Another great concept for one of our shows is developing these income streams. Because obviously there's a lot of different ways you can do it. You can do it in the stock market. There's a lot of different investment strategies that you can use in order to develop an income stream. And then what they say the magic number is 7, right? You should have 7 income streams, 7 sources that are bringing you income, and some of them should be passive, and you should be able to make money in your sleep, and that is very doable in this crypto space. And I know it's going under scrutiny. It's going to be probably overhauled in some regards with the staking programs that we have here. So that I think is a great another day topic, only because we only got a few minutes left at this one.
Sure.
But just while we're thinking of this out loud, helps put it in there. If
you can't make money while you sleep, you're going to work till you die. That's what Warren Buffett says.
It's true. Very true.
Yeah.
Anything else? Anybody else out there have any other questions or comments on what we're talking about today? And then I think there was a few on the myths list that we did not get into, right? I like the one about investing in the stock market is like gambling. We hear that a lot of times in crypto, saying you are basically just gambling. You can be gambling if you don't make informed decisions, right?
And another one too is that you need to sell when the market's in trouble, like when things are going bad. Like this is the time to unwind positions, and you need to be counterintuitive about that, right? Like if there's blood in the streets, you got to go, buy stocks or go buy oil, whatever it is. If people are being really greedy about stuff, you've got to be a little bit worried about how things are going to go. This is why we have those monitors, and this is why we have those pulse checks, and you do them every morning, which is great. You're like looking at the kind of index of the market, like how are people feeling? Are they bullish? Are they bearish? Are they overly bullish? Are they overly bearish? And those are indicators that you may want to take a pause. But when things go real hairy, people in I would say December, November, people who were scooping and hoovering up crypto and stocks in December and November last year, doing pretty well right now for themselves, even if the market was in a really big time of trepidation.
You gotta make your right decisions.
It's really tough though from an emotional perspective.
That is another conversation that I want to have with you, is emotion. Because one of the things that you had said was, I the day that I was liquidated 5 times, I was liquidated 5 times because I was exactly what you said. I was revenge trading. I was trying to make back what I had just lost. And you do that a couple times in a row, and you're like, damn it, what have I done?
Yeah. It's the same thing, you go to the roulette table and you're like red and it's black, and you're like red and it's black, and you're like, it's 50-50. How many times, if I just double up every time, how many times can it realistically go red? And in the same respect, the market can stay liquid a lot longer than you can. So, take those bets wisely. And I think, as we talked about that, like as we go to other shows, one thing we want to talk about is mistakes that are typically made by investors, as well as I come from a real passion of behavioral economics. So understanding the psychology of how people trade, why they do it emotionally, and the biases that we have will help us. If the more we understand them, will really help us become better traders and investors, because we can fight those biases that we see and may not recognize in our own personal lives.
Let me ask you a question, man. That quote that you just said, the market can stay liquid longer than you can. Is that a Matt original?
No, that's a Buffett.
Okay. I was gonna, because I loved it. I literally I started typing out the tweet. I was gonna put it out. That's something that I've been enjoying doing, is like when I hear something that I absolutely love in a Twitter space, like I want to tweet it out there, because I think the world needs to hear that stuff. So I mean, this is great. It's amazing that the more and more that you and I talk, I hear these things come out of your mouth that it is from that Buffett mindset, right? And it just makes so much sense to this market. So like the book that you've put together, it literally, it starts to make more and more sense, even without digging fully into it yet. The idea of why you did it, that concept, I love it.
Yeah, and originally we were just going to say, here are some quotes and here's why they're cool. But when I realized that there was such an opportunity for people in this space who completely disregard or don't really take into account some of the real practices that he's had for 60 years, this is some of the most important advice that anybody can get. And they're not looking to this person because, you know, him and, well, Charlie Munger came out the other day and said like crypto is Satan or whatever it is that he said. And, you know, nonagenarians, they're 90 years old. They don't care. They don't have any business doing this. Of course, they're going to like talk poorly about it, but that shouldn't mean that we can't benefit from the investment success that they've had over 6 decades. So that was exactly why we did it. And I'm, you know, hopeful that other people who read it just get a sense. It's not technical, so it's not overly technical. It's meant to be easy to read and easy to understand. And we make it just so that you can stay safe and stay profitable.
I just love all these old men. It's that classic meme, old man shakes his fist, right? They just like you said, they don't need it. They got more money than they know what to do with. Like, what do they care about crypto for? They don't need it. No one in their family lineage will ever need it, so it doesn't matter.
Well, it also goes to their notion of the circle of competence, right? Like you should only invest in things you understand, and they don't
Yes.
understand it. So it makes total sense for them to say no. They totally missed out on the IPOs of the 2001s and those kinds of things. They didn't understand technology. He owned World Book Encyclopedia for the longest time before like nobody needed an encyclopedia anymore. And so there was almost this kind of notion that he invests in things that are almost too old. But See's Candy's still around, and that makes him a boatload of money because people love chocolate. So, and Coca-Cola.
See's I think is that's the lamb one, right? I think
See's Candies.
Yeah, is that like their mascot? Like
Yeah,
lamb or something? I don't. Maybe I know what you're talking about. Maybe I'm confused with some other confectioner that's been around for a jillion years.
They are unreal. The Bordeaux chocolates. My aunt sends me a box every year for Valentine's Day, and she's done it for like 10 years. And I just have a box sitting in my kitchen right now. And my wife's vegan, so they're all for me.
Awesome. Zach, I see you got your hand up. What's going on, man?
Hey, I just have a question. Is your book, do you have an audiobook form of it or not so much?
I don't, but if you want, we can just have a phone call and I'll read it to you. You just pick a time.
I'm gonna have to pick up a copy of it. I was just curious because I listen to audiobooks while I'm at work a lot of times.
Oh no, I've been debating a bit about doing that. It doesn't really lend itself to it. I guess I could at some point, but there's also a digital copy as well. So if that's helpful, let me know. But just shoot me a DM. I'm happy to connect.
All right, sounds good. Thank you.
You got it. Thanks again.
I do love when you're like, just shoot me a call. Well, I'll just read it to you. It'd be like
it's like ASMR, but like it's yeah.
1994.
Well, I know you gotta.
Whatever the outcome, we will heed a prime rule of investing. Maybe I'll read it for you. I'll voice your book for you.
You could do it in that like Boston accent that you have. But where does it go? Yeah.
1992. In baseball lingo, our performance yardstick is slinging power, not batting average. There you go.
That's right.
There you go. Right. From the wise words of the Warren Buffett, the Oracle man himself. Yippee-yi-yo, Kaye.
That's right.
That's a personality. Like I just literally transform into another person when that guy comes out. I have to.
That's fantastic. That's fantastic. you got it nailed down. And as somebody who like lived in Boston for a number of years, and I'm not a masshole myself, but like
I was literally about to ask you, like, all right, man, I know that you're like, you live close to where I live. Like, are you a masshole? Okay, no, you just happen to live there. It didn't inject into you.
Yeah, exactly.
Perfect. All right, yeah, I got to run. I got another show to do for the Champagne Wives Club, y'all. So make sure that you check that one out. Matt, thank you for being here and providing feedback for Zach. And next week, I know we'll be back with another awesome topic. We'll get some more community feedback. So this is your financial advice, guys, from Matthew and I. We will see you next week. Have a great rest of your rest. West of the week. Go west this week. All right, y'all. We'll see you soon.
Thanks so much, Chains. Appreciate y'all.
Appreciate you. Bye.